Another thing to note under this new tax reform as an employee is that all income from your employer is now taxable. So if you were getting bonuses tax-free before, performance incentive that were not taxed, just know that from this new tax reform, they are now taxable. Also note that any income that you get outside of your employment as an employee is now meant to be taxed. So you are meant to file your tax on or before 31st of the preceding year yourself, stating all your income and filing your tax by yourself. That's what the new tax reform says. Now let's talk about what we've been saying online about transaction description and all of that. Is it compulsory to put description in your bank transactions or transfer under this new tax reform? It is not compulsory, but it is advisable. As I already said, you'll be filing your tax yourself going forward, right? So it is advisable for you to put descriptions in your transactions so it is easily documented, and when you're filing your tax in the new year, you have a proper documented account history. You know where all your money went into, you know how much you declare as income, what you're declaring as gifts, and all those things. It is advisable, but it is not compulsory. Will the federal tax organization go into your account and remove tax themselves without your consent? No, they will not do that. They can reach out to you, and if you are not responsive, they have the power to go to your bank and ask them to put a lien on your account just to get your attention, but they cannot deduct money from your account as tax without your consent. I also mentioned that I'll be talking about how you can avoid tax legally. So we have two terms under taxation. We have tax evasion and we have tax avoidance. Tax evasion is illegal. That means you're trying not to pay tax at all, and we know that is illegal. But tax avoidance is a legal way to reduce how much tax you are going to be paying. So as an employee, the way you can reduce your taxable income is to enroll in some of those schemes that I mentioned earlier in my video. Schemes like life insurance, NHF or mortgage plan, NHIS, that's health insurance plan, and voluntary pension contribution. So you are allowed to pay more than the 18% I mentioned earlier into your pension account. So if you decide to add more money into your pension account, all these contribution that you are doing will also help to reduce how much your taxable income will be. But also know that will also reduce your take home, that's your net pay, right? Since your taxable income has reduced, it will also reduce how much you'll be taking home. It's just that you're not giving more money to the government as tax. Thank you.